Good morning, everyone. Now it's recorded on the 21st of July 2025. It's 9:04 a.m. here. So I just want to talk about a simple method to time your entries into to make a profitable trade. So just like this kind of trade, as you can see, a strong moving average, about 200-day moving average, is a very good one. 200 period moving average, because it's weekly, not daily. So yeah, so set your moving average to 200. Whenever you see that there is some kind of pullback into this moving average area, or maybe a cross break through it, just stay alert. If you see that the momentum starts slowing down, it might be a very good entry, especially when there's a previous support area. As you can see, these areas here is a very good support area. Previously it's supported, and then uptrend for about a few 1 or 2 months, and then here also, when it sort of like a bounce from this zone, gone about few months again, and now it touches here again. Previously in around April, I did mention about this Coinbase, I think. So when it touches here and the momentum slows down, this is a very good entry, especially for people that because this is a weekly chart. It's very good for people that invest instead of trading. You just start buying here when the momentum slows down. Set your stop loss somewhere below this zone, and then just wait for a couple of months and see how it goes until you ride the trend until you see the momentum slows down, like this kind, or when the candles start turning color. So when you wait from here and to here is about let's see, let's say you start accumulating around in April, mid-April, this one, and right now it is about July. April, May, June, July, about 4 months. So you just hold your position for 4 months, and it goes from around the average of 155 plus minus all the way to 400 plus. So it is like double your money and double, triple your money, like that. So it's quite a good move upwards here. Just like this one is also a quite good move. So if you try to enter this kind of moves, you are quite certain to make money. So unless something very big happening and then it just falls down again, then you just cut your loss and exit your position, find another stocks that have similar patterns, that it goes all the way into this kind of zone, and then you start buying when the momentum slows down. It usually makes money. Usually, not always. There's no certainty in the market. So let's check out something else for now. This is Coinbase, so we're going to check about let's update a bit on Bitcoin, since Bitcoin has been the hot stuff now. It is going on upward trend, even though the candles are start growing bigger. It will start growing bigger and bigger in the future. So this is a good move upwards, but then there's a pullback, as you can see here. When there's a strong move upwards, there will be a pullback. So wait for a pullback, go back to somewhere around here, maybe 112,000, and from here you can buy in and then wait for it to go back up, especially when you see the momentum slowing down. Like just now I mentioned, the zones, you can buy around these zones. See, whenever it touches here, there's some kind of reaction. When it breaks above, there's reaction. So if it goes down here and then slows down, the momentum slows down, is a very good entry point. So when the entry point is here, you just hold your position and then wait for a few this daily chart. So wait for a few weeks maybe. Yeah. So I was just mentioning that previously, during this Hang Seng moves upward, any moves upward is a good move. Let's check it out. So for now, Hang Seng appears to be supported. Even though the momentum slows down a little bit here, you can see that they're trying to crack this zone here. Every time it goes here, it pulls back, goes up, pulls back, goes up, and pulls back. So will it break this zone? It might have a more serious pullback to this area, but then you can see that this moving average is actually moving upwards already. So if it goes into this zone, this area, and you see the momentum slowing down, you can see that the moving average is around this, estimated around to be this area, and then previous pullbacks is these zones. So when you see the momentum slows down here, you can enter around here. When you enter here and just wait for a few months if you are an investor. So because this is weekly chart, normally investor goes for the longer term period. So not all are trading setups. This can be very useful for investors as well. If you try to invest this way, you're more like a active investor instead of passive investor. You try to make money when you see that the momentum is there, so you chase the momentum. When the momentum slows down like here, I would have exited actually. And when momentum goes okay, I'll remove all this. So you can see here, when the pullbacks from here to here, you can see that when the candle starts changing sizes, that is when the momentum starts shifting. So you can start accumulating here. You don't buy in all at once. So start accumulating a little bit and a little bit slowly and build up your position. So you can maybe get somewhere around on the lower scale here instead of somewhere in the middle here. But we take the average, okay? So we go in around here. Then when you ride it for about from here is, let's say you enter around here, May, and you go all the way up to around June, about 1 month. You hold the position for about a month. And when the momentum starts slowing down, you start exit. Let's say we take the average here, average of the candle from the week to week. So around here, you exited here. So from here to here is about this is around 21,800. We take 21,800 to all the way to around 24. We take 24. So there's like a 3,000 point move upwards for Hang Seng Index. So if let's say hypothetically you are buying an ETF based on Hang Seng ETF, Hang Seng Index, you would make this kind of money in 1 month time. So if you are an active investor, you can try this method. You can just buy in when the momentum slows down, and then especially when it's around this kind of support areas. See, why do you buy in here when the momentum slows down? Because previously there is a support area here. So when you see the support is entering the support area and the momentum slows down, the chances of it going upwards from here is higher than going downwards. It doesn't mean it won't go down. It will go down. It might go down. So just for safety's sake, just put a stop loss. Exit, take a small loss. So you're risking this much to make this much. So it's worth it. In my opinion, it's worth it because you're not risking too much, and your potential to make money. Let's say you, okay, we take this example. This similar thing here. We can neglect this moving average. So this is a previous zone, you can see. When it breaks out above this moving average, don't expect it to really support exactly on the line. It might go down a bit and maybe go up above the line a bit. So this line is just show that this zone is a very contested zone. So when it goes up here and then goes back down, you can see the momentum slows down. So you'll start accumulating here, but then it takes longer to go up here because, as you can see, there's a few weeks of inactive. Maybe because it's end of the year. You can see this December 20 near ending of the year. Maybe people are away on holidays and volume is not that big. So around here, when everyone is back from holiday, around mid-January, you can see that there's a starting to have some buying momentum and start pushing it up. So if you buy around here, around mid-December, and then around mid-January or late January, it starts moving up. You waited 1 month on a swing up and down here. Just keep steady, set your stop loss. As long as it didn't break below the stop loss, don't panic. Just wait here and start buying and buying and buying. Just accumulate your position here. You don't really have to buy all at once. So you just slowly accumulate your position. And then after that, somewhere around February, early February, it starts moving upward stronger and stronger and stronger and stronger all the way up here. So this is where you have to take note. When this previous candle you see is quite big, this candle, and then it suddenly is shortens a lot, and it appears to be the wick almost the same area. This one. Okay, see, you can see it's almost the same area. It means this area is very resisted by something. Someone is selling a lot here. So every time it goes here, it sells down. Every time it goes here, it sells down. So you can see the momentum slowing down and slowing down and slowing down. This is where you should be selling. So you sell here, then just take your profit and go for a holiday or anything. Go Thailand or Taiwan or somewhere else. Just enjoy yourself. Just enjoy yourself. This is your hard-earned money here. From you waited from December all the way to March. So there's like 3 months, 3 months to maybe about 4 months, 3 months plus. So you waited here and then you exceeded your position. Go for a short holiday, use your money to pay off some debts or whatever. Then wait for a next position. It takes about a month or so when you see the position is moving all the way down to this previous area. So just wait. When you see that the momentum starts slowing, you can see this one is a big candle and this is a smaller candle. So this area is signal that the momentum is slowing down. So when you see the smaller candles appear, this is a confirmation actually. You can start buying around here, these areas. So you accumulate your position and then it goes all the way up. Unfortunately, the momentum slows down a lot earlier than expected, but then you still catch about 3,000 or 2,000 plus points, depending on where you sell. So it's still a very good profit. If you take your position, sell your position here, as usual, go for a short holiday, maybe enjoy some time with your family. Trading is not about all the time looking at the charts. So if you make positional buy and sell like this, it's a very, I think you can call it a passive income, okay? Because you're not really that active in managing the money. So because you waited for about a few months to sell your position, a month or so to buy in your position, or 2 or 3 weeks to buy in your position, 2 or 3 weeks to sell off your position. So in just wait for this moves upward or downwards. So you sell this one and go for another holiday. Maybe if you're in Europe or somewhere, you just go to London or some exotic places, island or whatever. Because now it's quite hot here in Asia. It's yesterday it topped about 36 degrees Celsius, so it's quite hot. But real feel it says about 41, so it's very hot. So we normally try to avoid some holidays in Asia because it's very hot here. Unless we go to the land down under, which is quite cold, will be better. But then we try to avoid holidays or going out at fall during the summers. So if you're trying to trade this kind of stock, this kind of moves, yeah, it's very carefree actually. Just when you see the position is slowing down, you just buy and sell. So it goes both ways. Yeah, if you are a short seller, so you should be planning your position here. But then these candles, actually these weak candles, it appears to be bigger. If you're building a position here, don't worry. Unless it breaks above your stop loss area, then you just exit your position. Otherwise, you just start accumulating your position here if you're a short seller. But then I wouldn't recommend a short seller to be building position here, because always remember, the 200-day moving average is where you have to respect it. And when it's above the 200-day moving average, always look for buys. When it's below the 200-day moving average, always look for sell. But then there is a technique that whenever it's very near towards this 200-day moving average, you can actually gauge it based on how flat it is, or where it's pointing upwards or downwards. So like now, it's already pointing upwards, slightly upwards. So if you try to short sell here, you might make money, you will make money maybe, but then if you're good enough, but then the risk is higher. So we try to minimize our risk. It might go down, so you might make 1,000 or 2,000 points from this index, but then the risk will be suddenly a sudden move upwards, and you might be caught in this kind of move. So we try to trade with the trend where the moving average is pointing towards. So yeah, try not to make this video too long. So if you are interested in this kind of new, it's not really new, it's a very old method that I developed. It's based on momentum moves, and where it's heading towards. Is a very carefree method of investing. It's not passive investing, but I believe it's quite considered a passive income. But then it's more like an active managing investing kind of pseudo investment type. But then, as usual, trade with care and be safe. Respect your rules, your whatever your rules is, and then make sure you cut your loss when you're wrong. Admit your loss. Just keep your loss small. The game is about keeping your loss small and letting the profits run. So if you can keep your loss small, the profits will come eventually. So okay, I'll just end it here, and hope I can get enough time to make a next video by the end of this week, hopefully. So trade with care. Goodbye.